Okay. It's been a long series, no doubt, and we're gradually coming to the end of the series, but we still have about 4 classes more. Okay, and that's because I'm trying to still see how I can summarize it and see how we can quickly close up. Okay, and don't forget that we're still taking orders. The orders are coming, and I appreciate it. Your support, your donations. We'll start distribution soon. I promise that we're getting really close, and like I said, we're posting the distribution here as well. Okay. Okay, we've been talking about shares, okay, and when I mean shares, you already know what, at this level you should know what I'm talking about. At least a business organization or a company, okay, of course, that is qualified to do so, is inviting members of the public to come and be part of the ownership structure. But in that case, you're paying for it, so you're paying to own part of the business. That will call shares. Okay, so depending on the units that you have, and that will represent your interest in that company. Okay, so that will call shares. And then we've been talking about how to account for the shares that have been issued to the public. And of course, before now, we've been talking about the methods, okay, of receiving the money from the applicants. That is, it's either you receive the money in full or you're receiving it instrumentally, right? Here sometimes we use the word outright or immediate, right? So we've looked at this payment, that is receiving money in full, okay? So now we're trying to look at instrumental payments. That is, you're issuing shares to members of the public, and then you're receiving the money from them, but you're not receiving the money at once. You're receiving it bit by bit, okay? So we can simply just say accounting for shares issued with instrumental payments. Okay, so what we are saying here is that the idea here basically is that the company might not be needing the money all at once. The company might be needing the money at different instances. Usually there must be a reason for you to want to sell shares. Of course, you want to raise money, and then the money that you're raising for a particular purpose. Okay, now instrumentally, what we're saying is that the company is not needing the money all at once. So what the company is saying is that, okay, when we need the money, we'll call you to come and pay. So usually, let's say the company wants to raise 40 billion naira. Okay, let's assume that the company, of course, there's one going on, I think, the financial sector. I want to believe it's Wema Bank. Yeah, they're trying to, but I think that was right issue anyway, but that's not what we're talking about here. So let's just assume that the company wants to raise 4 billion naira, but they are not looking at utilizing the money at once. So they want to utilize the money bit by bit. Maybe at the first stage they need 20 billion naira. Now the second stage they need 5 billion naira. At the third stage, let's say 5 billion naira again. Then the fourth stage they need what? 10 billion naira. Now you can see that we have 20 billion plus 5 billion plus 5 billion plus 10. Everything here is 40 billion. But they are not needing the money all at once. So as they need it, they call what? The applicants to come and pay. So what by installment. So you can see that this 40 billion that wants to be raised is, accounted for installmentally. There's a first stage, there's a second stage, there's a third stage, there's a fourth stage. Okay, so you can have even a fifth stage. Okay, but I don't believe there's a restriction on the number of calls you can make. But let's just bring it to this simplified form here. So it could be that upon application, let's call this application. That is, upon sending an interest, that is, you want to buy, okay, you want to be part of the owners of the business. So upon sending of or indication of interest, you're looking at raising 20 billion. Then after that, there's something called allotment. Is you want to try and, like apportioning, the shares, each unit to each applicants. Okay. So at this stage, you want to raise 5 billion. And then after this application and allotment, then at this stage, which is called, you can call it first call. That is the first time you're saying, come and pay again. You want to raise another 5 billion. Then this is the second call, of course. Since it's second call, you can call it second and final call. Okay? Then come and pay 10 billion. So what we're trying to say next is that this is what the company wants to raise, 40 billion. But they are not needing the money all at once. So they are trying to get the money from the investors, which happens to be the shareholders or the applicants. They want to get the money from them bit by bit. So the first stage here, which is when they applied for the units that they want, the company is going to raise 20 billion from them. Of course, the second stage is allotment, a sharing of the shares or units to each person there. The company wants to raise 5 billion. And then here, the company wants to raise another 5 billion. And here, the company wants to raise what? So totally, this 40 billion is broken down into these stages here. And that is how the company would get the money from them. So let's assume that one share now has a nominal value of 1 naira. Okay? So the company let's assume the company wants to issue 40 billion units of shares. Okay? Or let's not even look at it this way. Now let's just say the company wants to issue, let's say, 1 million units of shares. Okay? So 1 naira times 1 million will be 1 million naira. The company wants to raise 1 million naira. So let's bring the figures down so it's not that complicated. And now this is 1 naira. The company can break this 1 naira into 4 or even 5. Let's even say 5 stages. The first stage, which is application, the company might say, okay, you're going to pay 10 kobo. Okay? Second stage can be allotment. The company can say pay 20 kobo. Of course, this is 20 plus 10, that's 30 kobo. How much remain now? 70 kobo. Right? Now, the company can say, okay, we will now call you, which is the first call. After allotment, we'll call you when we need another money. They can tell you, pay 30 kobo. You can see that this is now 10 kobo, 20, that's 30, that's 60 kobo raised out of this 1 naira. There can be a second call. Company can say, pay 10 kobo. You can see now we have 10 kobo, 20 kobo, 30 kobo. Okay, so this is 60, this is 70. What's remaining now? Remaining what? 30 kobo. So this is the third call, which can be the final call. The company can say, pay your 30 kobo. So as you can see, this 1 naira per share is collected from the applicants in 5 different stages. 10 kobo, 20 kobo, 30 kobo, 10 kobo, 30 kobo. So we have 10 plus 20, which is 30, plus 30, 60 plus 10, That's 70 plus 10, that's what? 100 kobo. That's 1 naira. So this 1 naira per share, which is then as 1 million. Of course, here, if you say 10 kobo times 1 million, of course, this would be 100,000. This would be 200,000, 300,000, 100,000, that what? 300,000. So when you add all together, that would be what? 1 million naira. So 100 plus 200, 300 plus 300, 600 plus 100, 700 plus 200, that's 1 million. So that means that you are raising this 1 million naira in what? 5 installments. Of course, this is at par, because if this is the nominal value, then that means you're issuing at the same nominal value. So it means that you can still what? Do your instrumental issue, or receiving your instrumental payment in form of for issue of shares. You can have the par instance, you can have the premium instance, you can have the what? The discount what? Instance. So the accounting method for this has not changed. The only thing is that you're going to have it broken down into different stages, like I've done here. So if, for instance, this fourth call here is 40 kobo, you can see that when you add up, you're going to be having 1 naira 10 kobo. So it means that you have now issued above the nominal value. So that there's a premium here. But if, for instance, this one here is what? 20 kobo, you can see it's 10 plus 20, 30, 60, 70. This is 90. So that means you issued at what? 90 kobo. So that's below. So that means there's a discount scenario there. You see? So let's go back to what we have here, which is 30 kobo. So if you have 30 kobo, if you add up here, everything's 10 plus 20, 30, 60, 70, 1 naira. So that's a par scenario. But by the time you add up, if it is more than the 1 naira, that's a premium scenario. If it is less than the 1 naira, there's what? A discount what? Scenario. So you would have to now account, based on par, premium, or what? Third. Okay, for par scenario, premium scenario, and discount scenario has not changed. Okay, the only thing you're taking into cognizance here is the fact that what? You're not taking the money in full, you're taking the money in what? Installments. Okay, so your entries remains the, but it's not going to be at once. You're going to be bit by bit. So the installments will flow into the ordinary share capital account by installments. They will also flow into the premium account by installment, depending on what the approach was. As well, you can as well decide to just lump them in. It's also, it can be lumped, through the ordinary share capital account to the what? Premium. That's if you're issuing at premium. If it's at par, you just flow there like that. If it has discounts, of course, you know that it will flow in full to the ordinary share capital, but the difference will have to be accounted for in the discount what? On issue account. Okay, so you have to understand that if you are issuing shares and you're receiving money in installments, what we are saying here is that what? The money is received from the applicants bits by bits. So also understand that if you're issuing repayment in installment, that does not mean that you cannot have right issue. You can have right issue with this what? Instrumental payment. You can have bonus issue with your instrumental payment. You can have oversubscription with your instrumental payment. You can have under subscription with your instrumental payment. So almost every scenario we have, in fact, all the scenarios we have looked at when you're what? Doing payment in full can also happen when you're doing what? Payment in what? Installment. So in order for you to understand what I'm saying is that, during payment in full, we had these scenarios. We also have oversubscription, under subscription. We have bonus issue, we have right issue. So I'm saying that in the installmental payment scenario, you can still have at par, you can have at premium, you can have at discount, you can have oversubscription, you can have under subscription, you can have bonus issue scenario, you can also have right issue scenario under instrumental payment. But instrumental payments will now move a bit further. It is possible that since they are paying in installments, sometimes it is possible that some of the applicants at some stages might not be able to pay. So we account for it in form of either call in arrears. As a matter of fact, that's call in arrears. Okay, because you have called them and they've not paid, it now means that at that point they ought to have paid, but they are not paying. So you get now, so that cannot be accounted for them in form of a liability. Of course, we're going to have a class for calling arrears. Then we have some scenarios where applicants will not have been called, but they would have paid. That's call in advance. So in that case, at that point of reporting, the applicants are more like creditors to the what? Business. Okay? But call in arrears, the applicants are more like what? Creditors. Sorry, they are more like debtors. Okay? So it's more like saying that call in advance will be accounted for in form of what? An asset. Is it an asset? No, that is a liability. But call in arrears, it's more like what? An asset. Of course, we're going to have a class for call in arrears and call in what? Advance. So there I will talk about it in what? In detail. And then we have what called forfeiture of shares too. So we're going to have classes for all this. So when we look at it, you would have to, understand what we're talking about. So that's more like, a summary of what I'm talking about here. So if you have, questions, you can reach out to me via the number displayed. I'll be able to reply you with the right answers. To recap, when you say call in arrears, okay, of course there's a class. Let me quickly, clarify something. When you say call in arrears, what we are saying is that we have called the applicants come and pay, but at that time we're reporting the applicant has not paid. Okay, so the applicant is owing. Okay, that's more like a debtor, right? An asset. When we say call in advance, what we're saying is that we have not called the guy to come and pay, but the guy is paying. So at that point of reporting, the guy is not due to have paid, but the guy is paying. So that's more like what? A liability on the part of the business. Okay, so of course we're going to look at that as separate scenarios. Okay, so briefly we're looking at the instrumental payment scenario here, which can come either at par, at premium, or at discount. But we'll just pick one in our class exercise. Okay, just to tell us what or how to account for it. Otherwise, we know that at par, we already know how to account at par, we know how to account at premium and at discount. So these accounting method or techniques are still valid, just that it flows instrumentally into the ordinary share capital account. So if you have questions, you can reach me on the number displayed. I'm there to reply you with the right answers. Let's quickly take this question so we understand what we're talking about. So the following represents the balance sheet of Bread of Life PLC. So we have Bread of Life, 200 of naira provisions at 31st 2010. So we have non-current current asset excluding bank, and we have total asset. Financed by liabilities, short-term liabilities, reserves, blah, 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 blah. So we have authorized share capital of 20 million ordinary share at 1 naira each, ordinary share at 1 naira per share, 9 million, total asset there, or total liabilities rather. On the 3rd January 2011, the company issued 1 million ordinary shares to the public for subscription. All shares were subscribed for. Payment for shares were received as follows. Application, 40 kobo. Allotment, 30 kobo. First call, 40 kobo. Second call, 50 kobo. The share issued procedure came to conclusion on 30th April 2011. Show the necessary entries to record the shares issued. So let's quickly look at what we are trying to say here. So we have Bread of Life PLC. Okay, so if we want to, let's even know, is it premium, is it par, let's know the scenario. So we have application here, 40 kobo. Allotment, 30 kobo. We have first call here, 40 kobo. We have second call, that's the final call, 50 kobo. So if you're adding everything here, what do we have? 40 here is 70 kobo. This is 90. So 90 plus 70 here is 1 naira 60 kobo. So as you can see, according to the question, nominal value is 1 naira. Okay, so that means there's a premium of what? 60 kobo. All right, so now let's go. What's the first thing that we have? Application. So we have the application account there, credit, debit. Okay, so of course money will be received into bank. So how many shares were issued? We have 1 million shares issued. So upon application, we're going to have to take 40 kobo times 1 million. Okay, so 40 kobo times 1 million, this should give us 400,000. 0.4 times 1, 1, 2, 3, 4, 5, 6, 400,000. So we have bank here, we have 400,000. Of course, this will go to where? Ordinary share capital. 400,000, right? So we have allotment account. Upon allotment is 30 kobo. So 30 kobo times 1 million. That will be 200,000. So we have bank. 200,000 is paid in there. Of course, we have ordinary share capital. 200,000. Right? So the next one now here is what? First call. One first call is 40 kobo times 1 million again. So that will be what? 400,000. So we have bank 400,000. Of course, it goes to the ordinary share capital. So the next one here is what? Second call. Which is the final call. Of course, money is paid into the bank. 50 kobo. That will be times what? 1 million again. This will be 500,000. Of course, that will go to the ordinary share capital. 500,000. Okay, so money paid into the bank. So let's go. I'll use our bank now. We have our bank account, right? Upon application, but then let's check. Do we have money in the bank account before we receive money from the shares issued? Let's check. Yes, our bank is showing 2,950,500. So balance brought forward is 2,950,500. Then application. What do we have there? 400,000. Allotment. What do we have? 300,000. First call. What do we have? 400,000. Second and final call there. How much? So total amount of money we have in the bank. Okay, that will be 400,000. Is 700. 700 plus 4. That's 1.1 plus that's 1.6. So 1.6 million plus what do we have there? 2,950,500. What do I have? Carry down here will be 4,550,500. 4,550,500. 4,550,500. So the new balance bank now will be 4,550,500. Okay, so the next one here will be what? Our ordinary share. So we have our what? Ordinary share capital. What's the opening balance there? I can see 9 million. So balance brought forward here is 9 million. Right? So from application, we got 400. From allotment, we got 300. From first call, got 400. And from final second call there, got 500,000. Okay, now remember that your ordinary share capital is maintained at nominal value. So it means that in this ordinary share, we have the nominal value and the premium. Nominal value is 1 naira. So 1 naira times 1 million is 1 million naira. Premium here is 60 kobo. 60 kobo times that's 600,000. So that means we have to ensure that what we're taking to the ordinary share capital account is the nominal value of the shares issued. But here, you can see that what we transferred from the application allotment first and second call is what? The share value, the nominal value, including the premium. So we have to take out the premium now. So we have share premium of how much? 600,000. Okay, by way of deduction. So our new value for ordinary share capital will be what? 9 million plus 1.6. Of course, that will be what? 10.6 plus 1,600,000. That will be 10.6. Then minus 600,000. That will be what? 10 million. So our new balance will be what? 10 million. In total, we have 10,600,000. Okay, 10,600,000. So the new value will be what? 10 million. So what's the next thing here? We have our what? Share premium account. So we say what? Ordinary what? Share 600,000. That's what we have here. So the new value for share premium was 600,000. Okay. So after doing this, let us prepare the revised statement of financial positions. We have statement of what? Financial what? Position as at 30th, right? April 2011. So here we have our assets. Non-current, according to the question here, is 14,500,000. So we have current assets, right? But this is excluding what? Bank. What do we have? 4,590,000. 4,590,000. Our bank change to this 4,550,500. Right? So let's add up. 14,500,000 plus 4,590,000 plus 4,550,000. Excuse me, 500. What I have here is 23,640. 500. 23,640. 500. So this is your what? Total asset. So our liabilities now. Short-term liability according to the question, 4 million. What are 4,500,000? 4,500,000. Our reserve. Collect color note 1. So what's our note 1 here? So our reserve brought forward is what? 8,540,500. 8,540. Of course, I told you our share premium is part of reserve. 600,000. So what's the 540,500? We have 9,140,500. So this is our new value now. 9,140,500. So we add up, okay, plus 4,500,000. We have 13,640,500. So What's our share capital now? The new value is 10 million. So we have 10 million. Okay. So if we add this to this, we're going to be having 0050463. So we have 23,645. So this is the total liabilities. Okay, so you can see total liabilities here 23,640,500. Okay, is the same as total asset here 23,640,500. So what we have been able to achieve here is to raise money through issuing 1 million shares for Bread of Life PLC. Of course, the premium of 60 kobo, but the money was received in what installments. Upon application, there was 40 kobo, allotment 30 kobo, first call 40 kobo, second call 50 kobo. In add up, you have 1 naira 60 kobo, but the nominal value of the share is 1 naira. So of course, that means there's a premium of what 60 kobo. So you can see the application ledger, allotment ledger, first call ledger, second call ledger, bank account, ordinary share ledger, the share premium, and then the statement of financial position. So basically what we've done here is to account for shares issued with the money or the payment for the shares by the applicants received in installments. So you can go through it on your own. If you have questions, you can reach me on the numbers displayed. I'll try to reply you with the right answers. Thank you.